Hi everyone, welcome to Loan Talk with Thomas Reed. Our special guest today is Karen Olenski. Karen works for First Community Mortgage here in Chicago, but she can close a loan just about anywhere. All you have to do is ask. And today we're going to talk about home renovation loans. We're going to talk about turning that fixer-upper into your dream home. Hi Karen, welcome to the program.
Hi Thomas, thanks for having me.
Oh, you're very welcome. I got a question for you here. Do I need a 20% down payment to purchase the property?
No, that's a common misconception. You can purchase with as little as 3% down, actually using conventional if you're a first-time home buyer, or if you're doing an FHA loan, 3.5%, which is great. If you qualify for a VA loan or a USDA loan, it's 100% financing. So also the down payment can come as a gift from a close relative, and the seller can actually pay for part of your closing costs. So you can purchase a property with very little money.
Oh, well, that's fantastic.
Mm-hmm.
And what is the debt to income ratio mean?
The debt to income ratio is all of your monthly debts divided by your monthly income. And that will tell you how much you can qualify for a purchase of a property.
Interesting.
Mm-hmm.
Okay.
Different loan products have different debt to income ratio.
Now, if I want to buy a home, what are the steps I need to take in order to purchase a home?
I would say very important step is to continue paying your monthly bills on time, because it reflects on your credit completely. The next step is don't take on any additional credit. Leave your credit where it is. Don't sign up for a new car loan or anything else. Just keep paying your bills on time. I like to think though that the very first step is to reach out to a lender, because they can actually help you look at your credit and see if there are ways to improve it. And then that may take a little bit of time, but I think that's the first step. You'll also understand right from the get-go how much you could afford to pay for a mortgage, and also how much you want to pay for a mortgage. Just because you're qualified for a monthly payment doesn't mean you may want to pay that much, so it's a discussion that you have with your lender.
Oh, wonderful. Now, I've been looking for homes with my clients, and we see these homes are nice, but they're outdated kitchens and baths, and the basements aren't finished. Now, what do I do?
Well, if you really enjoy this neighborhood that you're looking in and you're seeing homes that are fixer-uppers basically, I think that's a great opportunity for you to consider purchasing those properties, because you'll be creating your own equity as you do renovation. Instead of buying a property that's already been rehabbed and selling for top dollar, this is a different approach. You'll be buying a home, doing the renovations that you want to do. Say you want to refinish the basement, or you want to expand the attic into living space, or you just want to update the kitchen and baths, whatever it is, that's something that you will be doing the way you want to do it. So you'll be getting the home that you want. It's a great strategy right now.
Interesting. Now, how does a conventional loan differ from a renovation loan?
Well, a conventional loan is the money that you're borrowing to purchase for property. A renovation loan is the money you're borrowing to purchase for property plus the cost to renovate it. So you take those two amounts, the purchase price, the renovation amount, and you combine them into one total loan amount, and that is what you would put your down payment on. But they're both essentially 30-year term loans, one closing, one monthly payment.
Interesting. Okay. Mm-hmm. Now, with rates being so high, is it a good idea to buy rates down? Is that a good idea?
Well, you will have that option when you speak to your lender. It may be a very good idea if you're doing like a 2-to-1 buy down, where it would be a seller cost. Actually, the seller will be paying for your buy down. So for instance, right now, say your rate is 7% and you do a 2-1 buy down. If you have the seller finance that buy down, your first year of payment will go down to 5% instead of 7%, so it'll drop down 2 points. So your first year will be 5%, the second year will be a 6% interest rate, and then by the third year, you're going back to your 7% original rate. At that point, you may want to consider, just if the market is so much better, just refinancing out of your loan completely to get a lower rate. Otherwise, maybe 7% at that point would look very good. The other option is to pay discount points, which is what the buyer would pay. A discount point is when you actually buy down the rate yourself. So for instance, you may be looking at a 7.25% interest rate for your particular situation. you would have the option to buy that down by paying discount points. So you might be able to pay a percentage of your loan amount to get it down to 7, or maybe 6 and 7/8, whatever. But that is a conversation you have with your lender, and it is definitely an option.
Well, I think you really answered all my questions. I think it's really a fantastic product because it lets people fix the houses up they wouldn't have been able to do. Now,
Right.
I have one more question. Now, how does the process work? Do I have to pick a GC? Do I need somebody approved? Can I have my uncle do the repairs?
Oh.
What are the rules?
Good, very good questions. What you would do is you would hire a GC, or just have a GC walk through the property with you that you're considering purchasing and have them give you a bid on the repair. The only self-help is basically you can paint, the walls after they're done, or you might be able to do a little bit of the demolition yourself. But you hire the GC to do this. By hiring, what I mean is you're going to have that GC write up the bid, and they will show you what your labor is, what your material cost is. You'll be able to look at that and maybe have another bid from another GC. So you can compare the bid amounts. So no, you will not be doing the work yourself. I'm sure that you have a job that you need to do. You don't need to manage your own project here, but it's great. So the GC would start the project for you. They will do it, and they will get paid draws as the project unfolds once they complete certain phases of the project. And then when it's all finished, it will be inspected, make sure everything has been done properly, and that will be the end of the renovation portion of your loan.
Now, how do sellers respond to offers like this?
We tell sellers that we can close these loans in 35 days. We allow a little bit extra time because of the paperwork that we would request from the contractor. They have to do that bid. We have to look at it. We have to have it approved. Every GC that we work with needs to be licensed and insured, and we do background checks to make sure that they don't have any liens on properties or they have no pending lawsuits. So we make sure that everything is very well structured from the get-go.
Really do appreciate your time. Thank
Sure.
you, Karen.
Absolutely.
Okay.
Nice talking to you.
It's always nice talking to me. All right.